For most people, their legacy happens after they're gone. But what if it could be different? I'd like to welcome Kevin Guttman to the Design Your Legacy podcast this lovely Friday. Welcome, Kevin.
Hi, Angelina. Thanks for having me today.
It's my pleasure to host you on this lovely show. So, where are you joining in, and share a little bit about your background for an icebreaker before we jump in?
Sure. I live in Colorado Springs near the Air Force Academy. I'm originally from Orange County, grew up near Disneyland, and my father was a real estate, a realtor, a real estate investor, and he also trained new real estate agents. So from a little guy, I was learning about real estate and eventually managed his properties and started investing in real estate myself at 21. And so real estate's been a part of my life, just my whole life, really. And when I started my career, I worked in the nonprofit world. I used to travel around the country and even around the world and raise money for people in the developing world so they could have clean water, medical clinics, schools, small business loans. It was extremely rewarding work, but I was gone about half the time. And my wife and I have 5 children, so I just needed to be home more. So I left that and we started flipping houses, which was really a blast. My wife has a real estate background as well. Ultimately, in 2004, 21 years ago, I got into the mortgage business. And so there we are, 21 years in.
Oh, thank you. That's a lovely background just to set the context for the listeners. Thank you. So let's jump in. You had shared with me a little bit about yourself in your bio as a reverse mortgage specialist. And actually, you're a senior. You're Kevin Guttman Senior, but don't bump. So, what are some of the misconceptions, whether it's what Susie Orman might say out there or any of the media personalities? Let's jump in to where the problem is, and then we're going to work over to the remedy before we talk about
Yeah,
legacy.
I think one thing with people like Susie Orman and even Dave Ramsey, and they do a lot of good, by the way. But when it comes to reverse mortgages, they're just not current. They're not up to date on how they work today. There's been some big changes happen in recent years to actually make it safer for seniors. So you asked about a misconception. The biggest misconception people have is I have to give up title to my house. And that just isn't the case. It's just like a mortgage. It's just like any other mortgage. You're on title and you have a lien against your home. And then when you move out, ultimately, the lien has to be repaid, in this case, by sale or refinance of the home. So what it does, Angelina, is it helps a senior homeowner remain in their home, which 91% of people want to do, maintain their independence. If I had a dollar for every senior who told me my kids aren't going to tell me I can't drive my car anymore, or I can't tell me what to do, they're very independent. They want to stay independent. Um, so they can maintain their independence, they can retain ownership of title, and they can gain access to their equity. And there's no monthly mortgage payment required. So that's how it's different than a traditional mortgage. No monthly payment required, and it's a non-recourse loan, which means the borrower is not responsible to pay it back. Only through the sale or refinance of the home can the money be repaid.
So where did that rumor start then regarding that there would be a loss of title?
That's a good question. The very first reverse mortgage was taken out in 1961. There was a widow living in Maine, and her husband had passed away. He was a football coach, and the local banker had played football for her husband. And so she had a lot of equity in her house, and the banker went to his bank and said, "Look, why don't we allow this widow to stay in her home, not make a mortgage payment, and then we just take payments of interest each month from her equity?" And so the very first reverse mortgage was born in 1961. Now, from 1961 to 1987, it was unregulated. Even 1988 is when the law was actually passed. So for 27 years, the industry was not regulated. So people got taken advantage of, and yes, some people even lost their homes. But it hasn't been that way since 1988 when President Reagan and Congress passed the Home Equity Conversion Mortgage Bill. They did a trial bill for 10 years to see if it would do what I explained a minute ago, allow a senior to remain in their home, maintain their independence, retain title of ownership, gain access to the equity, not have a monthly payment, and not have to repay it. And so for 10 years, they were testing it to see if it would do that. And sure enough, it did. They made the law permanent. So that's what we've had in place since 1988. And over the years, they've actually improved it and made it safer for senior homeowners.
That's really good to know because I think a lot of times when people don't know, they just become afraid. And so you have to shift them out of that fear mode to explain to them that there are options. Because yeah, they think to themselves, what if there is more time than money?
Exactly. And I think you just hit on it. The number one fear a senior has is they may not have enough money. They may run out of money because they're healthy, they're living longer. You got inflation, the price of eggs, etc. And so they see their think about it
Eggs.
this way. Yeah, they've lived their whole adult life and got a paycheck. Money's been coming in, money's been coming in, and now they're
Mhm.
retired. Every day Saturday, they're spending money, money's going out, and their assets are decreasing. And so, it's a valid concern that they may not have enough money. But here's the thing: people have three buckets of money. We have our income or wages, we have our assets, our investments, and then we have equity. And when people actually tap into equity, everything lasts longer. Everything goes farther. David Blanchett and Wade Pfau from the American College of Financial Planning did a study. It was about annuities, and they were just seeing if an annuity would help a senior not outlive their money. And sure enough, it did. But a reverse mortgage can actually function like that too. So I just would hope that people would learn about it and be educated, and just not take data or information from the internet, which tends to be inaccurate and outdated.
Well, I appreciate your speaking on it because I think one of the first places somebody does go is the internet. They go to good old google.com or another search engine, and then basically some AI overview or chat GPT comes in and starts to fill in the sound bites. So, who would benefit the most? Is it just seniors, or who is the ideal individual?
Yeah. So we have a jumbo reverse mortgage. Anybody that has a property over 1 million up to 10 million, that's the
Okay.
jumbo side. And then we have the traditional FHA version of a reverse mortgage up to 1.2 million. And so people that benefit are there's three basic ways that people use it. The biggest way is eliminate monthly payment. Two-thirds of people use it that way. And think about this, Angelina, if somebody can just they're on a fixed income, if somebody can just eliminate their mandatory monthly principal and interest mortgage payment and free that up each month, they're ahead in their cash flow. They can have some breathing room and they can sleep better at night. The second way people use it, about 30% of people use it to access their equity. So they have a lot of equity, or they may own their house outright. Now they can tap into that equity and they can get that money three different ways: lump sum, monthly payments to them, or a line of credit. We can talk more about the line of credit if you'd like, but that's kind of the secret sauce of how these works. All that money isn't taxable, it's tax-free money. So most people don't have a source of tax-free money. And then the third way people use it is you probably know people even who've lived in their home for a long time, raised their kids there, but now the home maybe doesn't suit them in this stage of life. Maybe it's too big to maintain, or they don't like the neighborhood anymore. Their friends have moved away, or they want to move closer to family, or they may have some deferred maintenance and they maybe don't have the money to update it. So somebody can increase their purchasing power by 35 to 45% based on their age, the value of the home, the interest rate determines how much they can borrow. But now they can move to a home that better suits them in a stage of life. Maybe it's a newer home with updated amenities and a part of town they want to live in, and not have a monthly mortgage payment. They make one large down payment and then there's no monthly mortgage payment. So these are the ways that it really can change a senior's life in retirement and on a fixed income.
Which is an interesting conversation to be having right now because there is such a trend around seniors, even including franchise businesses and seniors living at home as the new area of demand because they would like their critter comforts and not to be, let's say, shipped off to an expensive nursing home. Although it's interesting because in ethnic communities, seniors will stay with their children or grandchildren and keep it in the family. They don't get like sent off to it
Right?
could culturally speaking. Okay, well, interesting. Okay. Are there any other advantages? And then what are some potential drawbacks?
Yeah. So one of the advantages I see is like I think about my client in Grand Junction, Colorado. Grandma Pat is what her grandkids call her. She has three grandsons. Her daughter's a single mom. And I always ask people, I say, look, if you do this, how's this going to improve your life? How's this going to help you? And Grandma Pat says, well, I want to take my grandsons on a memorable vacation once a year. I said, well, tell me more about that. She goes, okay, this year we're going to go to Turks and Caicos. We're going to spend 2 weeks, I think it was, in Turks and Caicos. And I'm making memories with my grandchildren so that when I'm gone, they're going to have great memories of time with me. So that's one example of legacy, right? We're talking about legacy. You asked about downsides. There's really two downsides that I see. One is the fees. So on a traditional reverse mortgage, the fees are higher than a traditional mortgage because these are non-recourse loans and they have mortgage insurance. Traditionally, mortgage insurance helps the lender. In other words, they get all their money. They're insured to get all their money. In this case, it actually helps the homeowner too, because it's a non-recourse loan. What that means is they are not personally liable to pay it back. Only through sale or refinance of the house can the loan be paid back. So no debt can ever be passed on to the borrower, to their heirs, or to their estate. That's
So
a
let
big deal.
let me interrupt you for a moment. So that's fascinating because is the concern liens from court cases or liens from other parties, or is it if the property burns down? What could the catalyst be?
Yeah. So when the loan becomes due when the last borrower moves out. So they've lived there 10, 15, 20 years, whatever. The loan term is 150 years, by the way. So somebody cannot outlive it. People don't live that long. So let's just say somebody moves out and they're 85 and they owe 100,000, but the property's worth 500,000.
And why would they move out? To go to a hospital or to go to hospice or
Yeah, life changes as you get older. I'm sure you're aware, and different things happen. People need to move closer to family, or maybe they do go live in assisted living, or they pass on into eternity, right? They leave the earth. So then the loan becomes due, and the heirs or the borrower of the estate have up to 6 months to sell or refinance the home. If they need more time, they can be granted 2 3 months extension. So basically, they can have a year if they're actively trying to sell or refinance the home and they're communicating with the mortgage servicer. So one downside is the fees are higher. So that mortgage insurance, it's 2% of the value of the home. Now, these fees are rolled into the loan. Nobody's writing a check for it traditionally or usually. But let's say on a $500,000 home, that 2% is 10,000. Well, you don't have that on a traditional mortgage, so it makes the closing costs higher. But the other side of it is, Angelina, that this loan does more than a traditional mortgage, right? You can tap into your equity. It can grow by compound interest with the line of credit. So let me just touch on the line of credit for a second. I'll come back to the second disadvantage. The line of credit. So let's say somebody's house is worth 500,000. They can borrow 35%, which is about 167, I think. Now, they own their house free and clear. So that 500,000 is sitting there earning 0% return on investment. It's dead equity. It's not doing anything. Now they've put part of that to work for them to grow by compound interest. Let's say they're 62, own their house outright. Now they have a $167,000 line of credit. And that's going to grow by compound interest in their favor. We'll just say on average 7% a year. So the rule of 72, how fast money doubles. In 10 years, that money is now going to be worth 334 if they don't take any money. So now they're 72 and they've got 334,000 available to them to use however they want. They can travel, they can buy another home, they can help their kids or their grandkids, or like Grandma Pat, take their grandkids on a memorable vacation. I have another family that they take their whole family and they go to an all-inclusive resort once a year. The kids are responsible to get there, but then while they're there, everything's covered, and the guy pays for it through his reverse mortgage. So that's a legacy thing too, right? You're having these family gatherings and these family memories. Okay,
and,
let me
and to
circle
be
back.
able to subsidize that compared to if the individual is stressed out in between the bills and the payment for the whole life insurance policy and the this and the that, like we talked about in the preamble. So now it's like they could, and that was one of the questions I had for you, like how could this be a legacy tool more than just another financial product?
Absolutely. Yeah, so it makes me think of a family that I helped here in Colorado Springs. and they were missionaries, and they came off the mission field, and missionaries don't make a lot of money, but they had this house and it had all this equity in it. And so I helped them with a reverse mortgage to alleviate the monthly payment burden. They didn't have to pay anymore. A couple years later, they called me and they said, our property value's gone up. We want to explore if there's any money we could access, maybe with a refinance, and help our daughter buy her first house. Because you've probably seen that study by the National Association of Realtors. Homeowners have a 40 times higher net worth than renters. So their daughter was renting, just throwing away money every month, paying a landlord's mortgage. And now they help their daughter with a down payment to buy a house. And now she's building wealth by being a homeowner. Before I forget, I don't want to forget the second drawback.
Okay.
You could asked about me, what are the drawbacks? The second drawback is there's less equity at the end for the kids because they're not making a payment. You can make a payment, by the way, but you don't have to. So if somebody doesn't make a payment, there's going to be less equity at the end for their kids. But there's almost always equity at the end, how the loan is structured now, because people are only borrowing 35 to 45% of the value of the home.
Okay. It's so interesting that this is, I had heard about this probably about 20 years ago, but I think more is like, again, there's this trend of seniors as a niche in the population that cannot be ignored. So it's interesting to be having this conversation today because, again, like 10, 20 years ago, it was there, but unless we openly talk about it, people don't know. And there's not enough billboards out there. I think about when I'm traveling around, I see the billboards for like accident insurance, like, oh, did right? Those billboards. And so somebody has a reference point because they see it when they're on the freeway or on the, driving by the park bench or wherever. But I think that's again why education around this subject is important because people they need to hear it and they need to hear it being talked through. Like you had mentioned, like exactly how does it work? Who's eligible? Like what are the requirements? And
So
then what
here's a
is the
legacy.
upside so that they can dream again?
Yeah. Here's a legacy point. Um, Baby boomers are the first generation that had to fund their own retirement. There's no pension traditionally for baby boomers, unless you were in the government or something like that. But traditionally, they're the ones funding their retirement. And they've underfunded it, and they know it. And so what's happening is they're spending through their money. And what are the options that they have? Well, they can there's only three ways to access equity. Do a cash out refi or a home equity line of credit, have a monthly payment. Sell your house, pay the 6% realtor fee, and go live somewhere else or rent. Or three, do a reverse mortgage, the only program where you can access your equity and not have a monthly payment. And so they're starting to realize, okay, I don't really have enough money to live. Recently, Fidelity did a study of a healthy 65-year-old couple, and they said, how much money is it going to take for them to to live, and what healthcare expenses will they have? 315,000. How are people going to pay for that? Well, they're either going to use their investments or they're going to pay out of pocket, or they're going to get long-term care insurance. So what I have some people do is if they're healthy and young enough, they get long-term care insurance or a life insurance policy with a long-term care rider where they are transferring the risk away from them and their estate onto the insurance policy. So they don't have to worry about paying these things out of pocket. So that's a legacy thing right there. Had another guy, he goes, I'm concerned about if I do this, I'm going to leave less money to my kids. I said, well, you're healthy and still young enough. Why don't you buy an insurance policy, a permanent life insurance policy? You mentioned whole life or IUL, index universal life. So that kids are actually getting more money tax free because the house is paying the premium, the equity is paying the premium for this life insurance policy, and it's a hybrid where it's also long-term care available to him. So there's lots of ways to do it that are really smart. But like you said earlier, people have to learn and understand how it works and not be afraid of it.
And people can get very nervous about change. So thank you for speaking into this. I think the other part of it is I think people will hear it like once or twice, but then when it gets personal to them is when it's like, okay, then it becomes real. But right now it's like planting a seed regarding possibilities. And you're nodding, so you must know this about human nature.
Absolutely.
Yeah. So let me circle back to the legacy concept for a moment. One of the things we talked about in the preamble is that you had shared that most people think about legacy, after one is gone, but there's so much we could do beforehand. And so I had said back to you about, seed capital for entrepreneurialism, whether it's their children or others that have the skill and the talent but might not have the means. So what are some of your other thoughts of, how it could be different if somebody had access to equity through a reverse mortgage, of what they could do for their own legacy, maybe even just thinking about it for the first time?
Yeah, it's true. I'd say a large number of people, their legacy is made or determined or recognized after they're gone. And so I have one client comes to mind, and they said, we want to start giving money away to our kids. We want to start giving our estate away to our kids while we're alive. And I said, well, tell me about that. Why do you want to do it that way? And they said, well, we want to give with a warm hand and not a cold hand. In other words, while we're still here, not in the grave. I said, okay. And how is that going to help your children and your grandchildren? They said, well, one, we're going to be here to see the good that that money can do. Two, we can be around and advise and coach if they want that help on how to utilize those resources. And I thought, man, that is really thinking ahead. That's very smart that they would have the foresight and the desire to give while they're still here and help their kids or their grandkids. I read a report one time where if somebody can get a chunk of money early on in their life, like around 30, it just accelerates their quality of life, whether it's a business like you're talking about, or buying real estate, or whatever it would be. But if they get this infusion early on, an inheritance, a windfall, whatever, their quality of life just is exponentially greater.
I have
So
to interrupt you on that point. One of the things we say at my coaching and advisory from legacy planning is the head start is the head start. But most people have no idea unless they have something to compare it to.
absolutely. Yeah.
Okay, please continue.
Well, I love that you're helping people do that because if you know there I guess there's two groups of people, right? There's the people who need something like a reverse mortgage, kind of like a loan of last resort. And there are those people. And then there's the other people, probably more the kind of people you work with, that they really don't need it. They're fine, they have enough money. But if they had it, it would just accelerate or amplify what they're already doing, right? Whether it's with charity or their family or business or whatever it would look like. It's just an extra kind of like found money. They didn't even know it was there, but all of a sudden they can unlock it and start using it and utilizing it and leveraging it. And now everything grows, everything's better. They actually leave more to their family because they start at 55 for a jumbo reverse mortgage or 62 for a traditional.
Hmm. Yeah, those are some great points. I know that the following story I'm going to share is more of an extreme example, but it points to the principle of, again, dreaming. I think about Mackenzie Scott, and she had parted ways with Jeff Bezos, and she has, I think, shaped society as well as the industry of philanthropy in very new ways that all of a sudden people are looking over going, wow, what's she doing? Because her ability to give quietly because people can't contact her. But I bring that up because of this idea of one never knows when they get that opportunity to then think about how they can help or influence society. Like a lot of times capital, there's financial capital, but there's, I think, four or five other forms of capital: emotional capital, social capital, human capital, etc. And then when somebody has this opportunity, because again, they're never really asked unless there's an opportunity where there is that additional funds and they can leave survival mode, like you had talked about.
And I think about somebody like Warren Buffett. I mean, you got to know what you're good at. Warren Buffett's good at analyzing companies and buying companies and building wealth, but apparently he's not that good at giving money away. And
He's also
right?
not a very good father.
But
Hopefully,
he
he's not going
wants,
to be listening to this because I think his daughter went on to like the Oprah show, so he has skill sets in one area, but not all areas.
but he does want to be generous, and so he's giving his money to the Gates Foundation for them to give it away.
Oh, and the
So
Giving Pledge. Yes.
the Giving Pledge, yeah.
Yeah.
So you got to know what your lane is, and it doesn't mean we can't learn and grow. I'm all for that, but I'm just saying, you know, um, find those people who. This is one thing I always say: find experts and listen to them, right? Trust these experts because they know their field. And And if you can do that, it just saves you so much time and heartache. I'll give you a quick story. Last year, I had a great year. I was the top reverse mortgage producer in my town and my county, and it was amazing. But I had several clients come to me, and they said, we started with two other people, and they didn't understand reverse mortgage, didn't know what they were doing, and we finally found you. And will you work with us? Will you help us? And because last year was a tough year, last 2 years, 2.5 years were tough because interest rates were a 40-year high. We lost a lot of people in the industry. Some people were trying to move into reverse but hadn't had the training, thinking a loan is a loan is a loan, but they're not. Reverse mortgages are very different. And if you don't understand how they work, it's going to take forever to close them. My average is 21 days. I can close one in 21 days. I mean, that's the industry average is twice that. So the point is find an expert, work with them, trust them, and your life will be so much better. You have so much more peace.
That's wonderful. And before I move on to the next question, I wanted to make a point, kind of piggybacking off of what you had just shared. Some individuals will just say, Kevin, deal with this for me. Take it from A to Z, because they might not have the bandwidth or, like you had said, the patience to learn how all the details work, but they want it resolved. And so if you know how to solve it in 21 days, they might just hand it over and delegate it and say, please just handle this and allow us to trust you with it.
And I contrast that with the deal I just closed. I had a lady that inserted herself from the beginning and just was kind of controlling, trying to control the whole thing. And she didn't understand the process or what to do. And she would send me emails and say, send this verbatim to the underwriter. And I would. And then there's more things she had to provide because she's disclosing information now that we didn't really need to know in the loan. It was already approved, but now she's disclosing more information. So the underwriter was like, okay, now show us that statement, show us that document. So that loan took 3 times as long as normal.
Yeah, well, fear is an interesting thing, like you had mentioned before. It's shifting somebody out of fear and or survival into like just let's go into that place of possibility because that's when really growth happens in the growth mindset. Okay, so my next question for you is what are some of the smartest ways that individuals as well as families can have open conversations about using their equity even to support multi-generational goals because that could even be a new concept.
It's funny again. I think of there's two extremes. It seems like one is I'm not telling my kids anything, which I don't know that that's the best approach, but
That's called avoidance. Yes.
it means their life. I'm not there to control their life. I'm there to help them with a mortgage. The other side is they do bring the kids in and they help them understand why they're doing it and how it can help them. And sometimes, like I was talking to a lady and her son the other day, and her husband had just died. I said, "Okay, Linda, what are your options?" And she goes, "Well, I don't want to move." I said, "Okay, so you're not thinking about selling, which means you're not going to rent." I said, "You could get a boarder, a renter, like rent out one of your rooms." No, I don't want to do that. Okay. But she doesn't have enough money. See, she still has a $1,200 mortgage payment. I said, "Okay, well, you could sell and have a chunk of money and go live with your kids." I don't want to do that. Okay. Well, you could refinance and get more money out and have a payment, but you're limited with your income, how much you can qualify for. And you have a 3% rate now, and you're going to get a 6% something rate if you refi. No, I would do that. Okay, well, then that leaves the reverse mortgage because there's really nothing else. And I think sometimes people feel like I must be a loser if I need a reverse mortgage. I didn't manage my money very well. And I
Mm,
would say you're actually savvy if you've got all this money sitting there not doing anything for you.
that could make your life easier.
Yes. Or you can free up your mortgage payment and have a better quality of life. You're not a loser. You're just somebody that's choosing to love yourself, to take care of yourself rather than struggle every month. And it's sad to watch people, they don't go out to eat, they don't go have any fun, they don't travel, and they've worked their whole life to get to this point, and now they're not enjoying it.
I know it's interesting you bring that point up because there are individuals that have done quite well and they do have the mentality of saving. And I understand that from the perspective that their parents probably lived through the Great Depression, et cetera. And then they have all of this money saved and they can't even buy new kitchen cabinets. And
Yeah.
they will, I had an aunt that just recently got moved into a home. I don't think my cousins listen to my podcast, luckily, but I'm bummed. But she had sneakers and that were so worn out, and she could have bought new sneakers. They had like three different properties, and yet there is that mentality of, I don't know if it's like a mentality of I will win a gold star if I get to the pearly gates of heaven, or I see the Egyptian boatman and I've accumulated all of this, as if they're going to get an A on their report card.
Well, you can't take it with you.
Correct, correct.
There's no U-Haul being pulled behind a hearse.
Correct. So, what are some of the top uses for reverse mortgages that you've seen in 2024 and 2025 this year?
I wrote a book called A Reverse Mortgage Changed My Life because I knew all these clients I'd helped and how they were using it is so different. It's kind of like a fingerprint. Everybody uses it differently. And so I just was telling their stories. Actually, they told their stories. We just interviewed them and then, transcribed their story. And so many have come back and said, "You told our story so well. We appreciate it so much. This has changed our life. Thank you so much." Had a lady that went to her financial advisor, and she said, she's a retired nurse. And the financial advisor said, "Well, what are you going to do? How are you going to spend this time?" She goes, "I've always wanted to travel to national parks. I've always wanted to buy a Sprinter van and travel to national parks." So her financial advisor said, "Why don't you get a reverse mortgage?" So she came to me. Sure enough, she got money, got a Sprinter van, and she came by my office the day she got it. She had a little dog in the front seat, and she had her route planned out where she was going to go. And she's been all over the country visiting these national parks. So, what's today? Friday?
Yes,
Tuesday, I talked to her and she goes, "Hey, I just wanted you to know how much you've helped me, how you've changed my life. You've helped me reach my dreams. And I'm selling my house and I'm taking that money and I still have enough money to pay cash for a house on the East Coast so I can live closer to my son." And I just thought, man, this is so rewarding to help these people. Having another couple, they again referred by their financial planner. They had their home almost paid off, but they were still paying 1,100 a month, and he couldn't work anymore because he gotten sick. And so we paid off the mortgage, freed up that 1,100 a month, and then they had enough equity that they could get 900 a month paid to them from their equity. So now they're up 2,000 a month, and that just changed their whole life. I have so many stories like this. I have another one. This couple had moved from Arkansas back to Colorado Springs to live closer to their family, and he was struggling at the altitude. We're 6,800 elevation here, and he had to have the oxygen on. And the wife left the room for a minute, and he goes, "Look, I need to make sure my wife's going to be okay when I'm not here. I'm not long for the earth. I'm sick. I'm dying." I'm like, "Oh, okay. What does that look like?" He goes, "Well, we need to buy a home that is low maintenance or no maintenance, like a townhouse or a condo. And we're going to put one down payment down so she won't have a monthly payment. And, I just need to be sure that she has enough money to live on." And I said, "Well, as long as she lives in the house as her primary home, she maintains it, pays the property taxes, homeowners insurance, HOA dues on time. The term of the loan is 150 years. She can't outlive it." So we closed right before Christmas. And 5 months later, she calls me on the phone and she says, "Hey, Kevin, this is Sharon. I don't know if you remember me." I'm like, "Of course I remember you." She goes, "Well, I just wanted to let you know that Bill died. And you had told us that if this remained my primary home, I maintained it, paid the charges on time, property charge on time, I could stay at 150. Is that right?" "Yes." Sigh of relief. She goes, "Good. That's the only way I can afford to stay here because, I lost that income from my husband." So this truly is a reverse mortgage, truly is a game-changing loan. And I'd really encourage people to just learn about it. Don't listen to the media pundits who are ill-informed and inaccurate on them, and learn about how it can help you. Because, like I said, they're very individual, like a fingerprint, and you can use it different ways. That's why I wrote the book, because there are all kinds of different stories of how people have used it.
that's wonderful. And one of the things we also shared in our preamble and bantering back and forth is women, and the decisions that they're going to be making in the coming years. And it's so interesting because women actually learn better through auditory means. So maybe some of the ladies might be listening to this podcast in the very near future. Very cool. Okay. So before I jump over to the legacy portion, have you ever come across clients talking about legacy goals, or do you think it's still new in our society? Or does it depend on the net worth of that family or the individual that you're sitting at the table with?
Yeah, I don't think it's net worth. Very few people bring it up.
Okay.
I ask, I do ask, and it's
Okay.
kind of like a deer in the headlights look, like they haven't really thought about it too much,
Yeah.
which is
Okay.
sad because we're all leaving a legacy, whether we do it intentionally or not. So we might as well be intentional about it. But
Yeah, it takes a little bit of personal agency to step outside of the survival mode of making sure that either, stepping beyond the mouse wheel or beyond that place of conditioning, like we had talked about before, that perhaps our parents or grandparents didn't talk about it because they had to make ends meet, or it just wasn't something that that was brought up at holiday meals or at the dining room table. Okay, what does the word legacy mean to you, personally and or professionally?
yeah, so I really do try to do this with our children. We have intentional conversations about it. Um, for example, we've already developed our trust in our estate, and we've identified the executor, which is my daughter. Our son is going to be, he's a firefighter paramedic, so he's going to be in charge of health decisions if we're incapacitated.
Okay.
So they already know. They have access to all the documents. They have, they know all of it because we want it to be transparent. And by the way, Angelina, one thing I do see is when people don't do this while they're healthy and have their cognition,
And the
uh,
clarity.
yeah, the clarity, yeah,
Hmm.
they don't do this, it creates so much of a burden, so many problems for the executor or the kids. There's fights, there's, families break up, and it's just terrible. So to do it while you're still healthy and clear thinking, it's just so much better. And at the end, there's no fighting. This is what mom and dad wanted. It's all written
Yeah.
down. We're just carrying out their wishes. You get this, you get that. And it is just so much better. So there's a legacy piece right there, the estate. By the way, if people just have a will, which only, I think a third of people have, two-thirds don't. If somebody just has a will, they're guaranteed to go through probate. A will
Yeah, I
means
think it's
probate.
very interesting. I know about trust, but I've yet to convince my parents to consider a trust. But absolutely, I want to share a quick story, even though I have a window of time with you today. And the quick story is, even individuals that are celebrities or professional athletes, etc., have very human issues. When Robin Williams passed away, the fighting and the litigation afterwards weren't due to multiple marriages or children from multiple spouses, etc. It had to do with fighting over like the bicycle and the baseball cap, which is very human. But so
Yeah.
who did Robin Williams want to get granted the baseball cap? Who knows? We didn't know.
Yeah.
Yeah.
Yeah, that's funny.
So when did you first realize your work with reverse mortgages could help people shape their futures, perhaps even shape their legacies, and giving them choice and freedom to breathe financially?
Oh, I love that question. The very first reverse mortgage I did was 2015. And a client had referred her mother to me, 84-year-old lady named Carmen. She's about 5 foot nothing, full of fire. And I said, "Hey, Carm, why do you want to do this?" And she's like, "Well, my budget's tight." I'm like, "Okay, a lot of people going through that, sure." I said, "Well, tell me more about that." She said, "Well, to be honest, I'm using credit cards to buy groceries." She lived in a duplex, so the rental side paid her mortgage, but only had Social Security. She didn't have enough to live on. And so at the closing table, I'm doing the math. I know we freed up her monthly payment and we freed up the credit card payments. It was about 1,100 a month. I said, "Hey, Carm, I know the math, so I'm not asking a numbers question, but how is this going to change your life? How is this going to help you?" She kisses me on the cheek. I had to go home and tell my wife I got kissed at a closing today. First time that's ever happened, 21 years. But she kisses me on the cheek and she said, "This is going to help me sleep at night and I don't have to worry about money." And I'm like, "Man, I'm in. This is not for the kiss, but just how it changed her life. This is great. If this is the power that I can empower people and help them have a better life, I'm all in. So yeah, that was a defining moment for me. Like, man, these loans are it's more than a loan.
Yeah, absolutely. I think that's an amazing story because they say it's not the straw that breaks the camel's back, it's the thousand things that lead up to it.
Yeah.
Yeah,
Think about the stress people have when they don't have enough money. It's just miserable to live that way. You're worried all the time and you're watching your pennies, and it's just no fun. It's not a fun way to live.
yeah. A lot of people live lives of silent desperation. That's the expression, but they're never going to tell you about it, or they're rarely going to tell you about it. Yeah,
Which is why I think it becomes a loan of last resort, because they're exhausting everything else because they ultimately want to leave the house to the kids. But the truth is, the kids don't want the house. At that point in their life, the kids have their own house. Really, what they want is the equity. So, one of the questions I asked people, I said, well, one of you is going to spend it, either you or your kids. So, if you need it, you probably need to tap into it. There'll still be something for them, it won't be as much.
yeah. Well, carpe diem, because like you had said, we got this window right now, and to maximize it. Very cool. Thank you for sharing that story. What kind of legacy are you hoping to leave through your work and your life?
So I think I'm doing it with my work because, I have all these online reviews of people just telling how it's helped them so much, which is very rewarding. But also with my own family, with my own kids and grandkids, my wife and I are very intentional to pass on our values and to make memories with our kids and to spend time with them on a regular basis. So, for example, I take my kids out for lunch once a month on their birth date. So if they're born on the 20th we go out to lunch. And it's just a catch up. It's just one-to-one catch up. I also do it with my sons-in-law and my daughter-in-law. Try to spend time with our grandkids. We'll go do special things with them and just be there, be around. My grandkids like me to read books to them. So just doing that grandpa time, and being available to talk about anything they want to talk about. So we're doing our best to be there for them and to be available and to have these conversations and to be transparent and try to take care of our business while we're here so we're not a burden to them. So that's really legacy is a lot more to me than just money. It's
Mm.
it's your values, it's your beliefs, it's you know what you stand for, right? What's your core? Why do you do what you do? Why you live the way that you live? So faith is part of it, right? Spiritual discussions. So yeah, it's a little more comprehensive to me than just money.
Yeah, I like what you had shared about time, that you give your time intentionally, whether it's on that birth date, whether it's the 20th or whenever, because time is one of those assets that's not renewable.
Agreed.
Yeah. And a lot of times what people want the most is somebody else's time.
And this is the most precious thing we can give, really.
Yeah, absolutely. Out of curiosity, what are some of the individual or shared values that you have or that you and your wife have or you and your family share, etc.?
Yeah, tell the truth, be honest, take responsibility for your decisions, for your life. If you mess up, own it, ask forgiveness. Um, when our kids were growing up, we always said, look, you may disagree, but you got to work it out. You got to, we're not alienating each other. We're not walking away from each other. Figure it out, resolve it, reconcile. And so today, our kids, they're all close. They all love each other. They all love us. And we've just created this culture of um, we're for each other. No matter what happens, we're for each other.
Oh,
We're
that's a great guiding principle, even like a family motto.
yeah.
Yeah, because the world can test.
No kidding.
Yeah. Yeah, in a thousand different ways and and angles.
And
Yeah,
nobody lives a perfect life, right? We all have decisions we regret and wish we could do over, and we try to give each other grace and just say, okay, it wasn't your best day. We're still good. I
that's
love you.
lovely.
I forgive you. We're good. We're moving on.
Yeah.
We're not going to dwell on it. We're not going to beat you up over it. And I- it's funny. We always celebrate birthdays, and so our son-in-law had a birthday month or so ago, And we always go around at the table and we're having cake or whatever, and we share what we like about that person and we share a favorite memory about that person. And my son-in-law said, he goes, well, about me. He said, the one thing I know is you are for me. You're in my corner. And I'm like, you got that right. I am. I'll do anything I can for you.
That's awesome. They say if there's just one individual that believes that someone else is important, it can just do so much in propelling that individual forward in life with
And I
their.
think we all need that. I think we all need that one person or however many it is, hopefully more than one, but that because we know ourselves, right? We know our flaws and our faults and our hang-ups and whatever. But if that one person just believes in us no matter what, we're like, okay, well, I can go on. I can make it. I can take the next step.
Lovely. I'm so happy you spoke into that. Okay, before I ask you about your website, my final legacy question for you is if you could set aside a weekend or two a month to design a hardcover coffee table book, what images, pictures, stories, life lessons would fill its pages?
I've had such a great life. I mean, I don't know many people who've been to 48 states and 40 countries and just met some of the most amazing people, literally serving their community, serving their country, and paying a price to do that. So it'd be pictures of when I was working in ministry, those pictures, those people. It would be friends that have impacted my life over the years, mentors. It would be my wife and my children, my grandchildren, and just how they have enriched my life. It would be my clients and my partners, people that I talk to on a regular basis that they've invited me in to help them with a very important decision financially. So those would be the memories or the pictures I would have of, I guess it's relationships and it's just things I've had the opportunity to be a part of that have shaped me.
Oh, that's a lovely answer. I hope one day you'll get around to creating that hardcover coffee table book.
That's a great goal.
Yeah, because like I had shared with you in the preamble, 100 years from now, somebody might want to read that.
Yeah. What I have thought about doing is creating the YouTube channel and making it private so only my family could see it, but then just passing on these lessons and these values and they can watch it anytime they want and just little snippets, they're not long things maybe, but a story here or an illustration there just to say this is what grandpa believed and why.
Very cool, very nice. What's a good website if a listener would like to learn more about reverse mortgages and yourself?
So I've worked really hard to develop a website that is resourceful and educational, has videos and interviews and FAQs and a consumer guide. The consumer guide I wrote is so helpful. It answers so many questions that people have. In fact, I wrote it kind of like to answer the most important questions people have. And they can find that at reversemortgagerevolution.com. And I hope people visit it. And there's a calculator there. They can calculate how much money they can get. So there's just a lot of great tools there that will really help people.
Wonderful. Before I read my closing paragraph, I wanted to share one fun fact about you with the listeners that Kevin worked for the Denver Broncos during their Super Bowl victory season. So
Yeah.
yeah, that must have been a
I,
lot of fun.
I was a ticket taker at gate 6. And so the first quarter, I scan the tickets and then we take a little break, get some food, and we go into the stadium and be ushers. So yeah, it was really a great year. It was Peyton Manning's final year. And yeah, if anybody's in Colorado, the Broncos are a big deal. So
Yeah, yeah, very cool. Well, thank you so much for taking the time today to be a guest on this platform. I really appreciate what you had shared about the advantages, as well as what people need to know, and also some of those rumors and the emotional stuff also, that somebody doesn't have to think of themselves that, quote, as, as a loser, as a winner, but maybe that they're just being strategic in their financial literacy. So I appreciated every aspect that you talked about because I think all bases need to be covered. Because when somebody makes a choice, it not just affects their wallet and their pocketbook, but rather their lifestyle, like the lady you had shared where she sleeps better at night. And particularly the story you shared with the one particular female client called you and she was like confirming A, B, and C. Is that right? And you're like, yes, that's right. And I just thought that so interesting because again, sometimes people have to hear it.
yeah, Absolutely.
Very cool. So thank you very much for your time today.
Oh, such my pleasure. Thank you so much.
Okay. In closing, I'm Angelina Carlton, the hostess of the Design Your Legacy podcast, as well as the founder of Legacy Planning, a boutique advisory and coaching firm based out of Beverly Hills, California, USA, but international in those I consult. I hope to dive deep into subjects that can help a person define, develop, and execute their legacy, and continue to scour the landscape for those who can be great resources to every dimension of your legacy. For many listeners, there can never be enough education and preparation in the moot or moat around your castle. For many listeners, again, um, whether you find yourself in new wealth or generational wealth, may the content on this channel be an anchor in any storms ahead. We do our best to provide original content for your intellectual and emotional curiosity. If you're tuning in on Apple Podcasts, Spotify, or SoundCloud, please remember to rate and review, share with your family and friends. And if you feel so inclined, send an email to either Kevin or myself and let us know your feelings about today's conversation and episode. So thank you so much for joining us. And thank you, Kevin, for speaking into your legacy.
Thank you.